All right, what's up, guys? I hope you're doing well. James here from jamesdforsythe.com. So I've been looking more into the whole FedNow service. I've been doing some more video. I've done a few videos on it already, but I still kind of like wanted to get more into it and find some more sources that aren't necessarily Fed related, right? That maybe look at it from a different point of view, whatever it happens to be, right? And so I've found one. It's from a place called Payments. I'll switch over there so you guys can see it first. Um, so I think it's their blog. It seems like a payment system kind of company. I'm assuming because they have like partner with payments, that sort of thing. I guess it's a company. Um, but they say something that kind of took me off guard on just like how big or guess how big relative to the for the pilot program that they're running now, and then how big it could be whenever it originally launches in mid 2023, right? Talking about the FedNow service. And I think if you just from simple division, if everything works out and all the same institutions that they're lumping in there, it's something like 58 times, right? So more than 50 times in terms of the amount of organizations that are going to be a part of it. It's also involved, I'm sorry, and there are more different types of organizations than I originally thought. Because after reading just um, the Fed stuff, I thought it was just going to be financial institutions, right? And I don't know if it's just how the Fed is defining financial institutions is broader in scope than payments happens to be, or what. But to kind of recap a little bit of what FedNow is, it's supposed to launch next year. And so this is the nationwide introduction of the Federal Reserve's FedNow SM service will offer 24/7, 365 funds availability to help all types of financial institutions move beyond the P2P, so person to person use cases that fintechs popularized, right? So I'm assuming this is like your Venmo, your Cash App, that sort of thing, right? Person to person transactions. So the FedNow service will broaden access to instant payment features and use cases by clearing and settling payments between financial institutions around the clock every day in a Federal Reserve Bank master account. This always on payment system this always on instant payments functionality also reduces interbank credit risk and liquidity risk for participant institutions, increasing the appeal of current and new use cases, right? So basically, it's like instant settlement for transactions and that sort of thing. All participants have this kind of Federal Reserve Bank master account. More, not necessarily a reserve account at the Fed, but it's because I don't want to give the implication that they're trading bank reserves, right? And that's how they're settling it. So I haven't found direct maybe it's their own funding or whatever the company or the institution has, right? It's kind of like a regular bank account. It just happens to be with the Federal Reserve. So I'm not saying that that bank account is denominated in bank reserves, right? And so again, kind of defining the line, I guess, between how these financial institutions because are going. I don't know how to define it because they haven't said anything explicitly on like what's the difference between these master accounts, like the actual currency, I guess you could say what's in it. Even though I know it's dollar denominated, but it's still like there are they bank reserves if Square has it because that's one of the participants. And so in the pilot program, there's more than 120 organizations are a part of this FedNow's pilot program, including Square Financial Services and other fintechs and processors, right? So I'm assuming like PayPal's in there as well, that sort of thing. And so I don't know if you'd say within this master account, Square has bank reserves. I don't know how they're explicitly defining that. Because I'd assume basically just like only depository institutions can have bank reserves, right? That's was my assumption. So I'm assuming that this is going to be different in terms of what's kind of what lives within this master account for the FedNow service, if it's completely separate from depository institutions' reserve accounts, or if it's essentially the same thing based off of functionality, or how exactly you want to define it. Um, I guess it would depend on whether or not the Fed can actually, introduce funds, we'll say, into these master accounts like they can with reserve accounts, right? Or artificially, I guess you could argue with like interest on excess reserves and just kind of that sort of thing. But that's a different topic, I guess. I'm just kind of thinking out loud too. But so to continue a little bit more on this ISO, I guess 20,022. It's a global standard for payment message specifications. And this was a strategic decision in building the FedNow service and a foundation for broad interoperability across the domestic ecosystem and across borders in the future. So the FedNow service will leverage the FedLine network for secure connectivity, which today connects 7,000 financial institutions and processors to the Fed's critical payment and information infrastructure, services, and applications, such as ACH, wire payments, and Federal Reserve accounts, right? So I'm assuming the we're going to say where the processors are kind of excluded from the Federal Reserve accounts. I'm guessing, because that just makes sense to me. Again, depository institutions have the Federal Reserve accounts, and they're just kind of the language they're using. It's all lumped together. So to kind of, I guess, point out that there's nuances there that they don't explicitly say, but then again, it's just an article on a website, so take it for what you will. Um, But yeah, and one thing to kind of note with this messaging system, right? And so maybe this is kind of their answer because I'm putting this video and the FedNow stuff in the Central Bank Digital Currency um, playlist, like for a reason, right? Because it's not necessarily like FedNow is the introduction of a CBDC, and I've explicitly stated that, but it could be seen as kind of building the initial infrastructure. Um, And now that hasn't been explicitly stated, but within those videos I went over, are the videos already in this playlist, right? Consist of a few discussion papers by collaboration of the world's central banks, basically, with the board of governors being included within that, right? And they're all published by the BIS, right? And this is explicitly about CBDCs. This group of papers I'm talking about, not this one, right? And basically, all of the functions and kind of almost like selling points of what they're doing with this FedNow service, or like the advantages it'll give, and that's what they're kind of promoting, right? In a way, I mean, as is to be expected. That's not to say it's a negative thing, right? That's what you do when you create something new. But basically, especially with this interoperability, there was an entire like that's an entire paper out of that entire series of papers, right? I think it was four, right? And then second or third one, something like that. One of those two, I think, was basically only about interoperability, and so it's just I kind of want to do that to put and to talk about FedNow with respect to CBDCs, because there seem to be a lot of similarities between what the FedNow service is doing or will do, and then what was discussed on how a possible CBDC could be implemented. And these papers were published 2020. The first one was, I believe, into mid 2022. I think is when they stopped publishing them, right? Or the last one was published, I guess I should say. So, and then the pilot program actually started in 2021, I believe. Wonder if they give the actual date for that. Maybe it's later, but I'm pretty sure the pilot program started in 2021. Maybe I just didn't put it out. I don't know. But regardless, that's just kind of a similarity I'd like to draw just to kind of bring it to attention. It's something I'm still actively researching, obviously. But just kind of putting that out there. Also, it's always open for further discussion. That's kind of what the videos are for. It's not necessarily like, hey, this is what this is. It's more of like, this is what I found, my initial thoughts as I'm kind of, it's kind of like um, open research in a way, is kind of what this whole thing has turned into. Right. And so that's kind of what it's meant to be is I'm researching different things and then basically as I'm kind of synthesizing the information myself, I'm also kind of putting it out there for comments, discussion, that sort of thing, because that's really the whole purpose of this, right? And so, that being said, and that's kind of why I'm drawing the conclusion, or I guess similarities between CBDCs and FedNow. Again, not saying FedNow is going to be a CBDC, but it could be seen as an infrastructure, or at least there's a lot of similarities between what FedNow is purported to be and basically the underlying infrastructure that was discussed and thought of within that discussion papers for the implication, I'm sorry, for the introduction of a central bank digital currency. So kind of just putting that out there in a way, right? Something to keep in mind. But regardless, so what this does, one of the benefits, it's not just the person to person stuff. I also did a video on the different use cases this could be for, like C2B, B2C, B2B, that sort of thing. If you guys don't know about like payment stuff, like consumer to business, business to consumer, business to business, that sort of thing. They're also talking about giving examples of like insurance payouts, taxes, that sort of thing. Somehow, maybe you kind of, well, I'm not going to go down the taxes route because I'm still young and not going to lie, pretty inexperienced with that still. Um, but regardless, kind of an aside. But one of the, to continue with the article and not get too far off topic, right? And so one way this could be a big difference for businesses, at least as I say, is this instant payment could be applied to invoices, right? And it can be of immeasurable benefit to companies that want to pay their suppliers in real time, get paid in real time, and operate more efficiently by associating funds with the correct invoice, right? So these functionalities will improve efficiencies and cash flow. And this comes from, well, it says he said, it's, I think when they're referring to he, they're talking about this Nick, and I'm so sorry for, I don't know if I could pronounce the name correctly, but Stanichu. I gave it a shot. Sorry if I mispronounced it. But he's the Boston Fed senior vice president and also kind of the business executive part for the FedNow service, right? And so basically this is how he's purporting it. And so, since he's one of the Fed presidents and he's not a part of the board of governors, and so he's kind of, and it says business executive, so it seems like he's actually a part of the, the private business side of the Federal Reserve System. I'd probably put a little bit more weight into what he's saying. I haven't looked into him specifically, so it's kind of not the point of this video. But that being said, it's kind of maybe gives more credence to his comments about how it applies to businesses, right? I can especially see the associating funds with the correct invoice from some experience that I've had with that sort of thing. Sometimes it can be difficult if it's not explicitly stated, or if you have a lot of, say, you work with one supplier for a lot of things, and you buy a lot of things from one supplier, and then sometimes it can get kind of messy, at least from what I've noticed. But, anyways, also, early feedback indicates payroll may be an early adoption use case for pay on demand models place less demand on batch processes, right? And so, what I'm assuming comes from the sentence is basically like daily paychecks in a way, or some equivalent. So, not having to wait 2 weeks for a paycheck. I know that's why you kind of have a waiting period for certain things. Like for what I do for work, we get per diem sometimes when we travel. And so basically, like we have to submit everything on Monday and then we don't get per diem until Wednesday, right? Because it takes a certain amount for accounting to do their stuff. And then after that, it takes a day and a half or a day somewhere. in there on everything to kind of settle through before we actually get paid for that, right? And we use those funds explicitly for the travel expenses, right? That's what they're for. And so I can see where that's definitely an easy or a would be very helpful in that regard, because then we wouldn't have to basically that first week up front deal with all the costs and then basically just be reimbursed, right? So that I can see where that would be a good example for it. And kind of a final concept, I guess, that you can look at this for is the whole fraud thing, which is always brought up in any terms of payment system I've noticed. It was all over those discussion papers. Pretty much everything's about money laundering and fraud. Um, but as is said, faster funds come with the threat of faster fraud, right? And so whoever this Webster person is noted concerns that as consumers initiate payments, those instant transactions might not make their way to the right receiver. People make mistakes all the time, right? And so apparently, the Boston Fed president or vice president of the name I can't pronounce was cited saying that a strong set of multi-layered controls and capabilities in the initial version of FedNow is to support fraud management, mitigate risk, and assist financial institutions as they battle bad actors, right? And so basically, the FedNow service features will help participating financial institutions conduct investigations and provide returned funds connected to fraud and errors, right? So basically, you'd get your money back if you accidentally sent it to the wrong person, right? And so I don't know how that's different from what you would deal with now with, say, like Venmo or Cash App, because I've never accidentally sent it to the wrong person. I don't know if you can just recall it or cancel it or however that process is, because I don't have personal experience with that explicitly. But regardless, biggest thing I got from this article was in the title really is how much basically by connecting this FedNow to FedLine, so many Fed things, there basically would multiply the number of organizations from a, I'll say around 120 because that's a number they gave. So I'm assuming less than 130, um, basically to about 7,000 it seems. So that's more than 50 times, right? And so I don't know if like throughput would be an issue. Um, I'd assume not, because it says it's leveraging the FedLine network, which seems like it's already established just from the language. And so, I mean, this is when looking into this, it was the first time I heard of FedLine. So there's that. I don't know how well the system functions already. Um, so I don't know, but yeah, that's pretty much it. Kind of just some other things to look into, I guess, would be like the difference in how these master accounts relate to reserve accounts already held by depository institutions, right? So I don't know where the nuances and kind of that line is drawn between the two. And that'll be something that will be interesting to look more into, right? So I'll try to find something on that. Sometimes it's very difficult to find specific information on Federal Reserve websites and that sort of thing. So, anyways, I'm going to leave this one here. So, I hope you guys have a good night, and I will see you on the next one.